Hello guys, welcome back. Welcome to another drill. This drill is called momentum drill, and the point of this drill is to go long as price is dropping and to go short as price is rising, on the idea that when price rises, you focus on the speed, on how fast it goes up, and when you see price slowing down, you go short from that exact point because some big player is up there trying to prevent price from going up. So price is going to, of course, slow down because it's not being met with that much buying pressure to move up, and sellers are being stacked at the highs. And the same thing goes for the lows as well. So you're going to see how I focus on those fast moves up and down, and how I'm just focusing on the speed of the candle. And when price is dropping and I can see that price is speeding up, it's picking up steam, I'm going to cancel that short and I'm going to wait for it to go up even more, then go short from a higher point. So I hope you guys learned something from this drill. Okay, so the momentum is still to the upside, so still no reason to get in. I would just look for that exhaustive move to the upside to go short. It looks like it is struggling a bit, so I'm happy to go short here. Not looking for big profits. I'm not looking for any big profits. Come on, sweep down. Not seeing that many buying on S&P. S&P drops. Nasdaq will follow. There's the drop. Nice. Dropping down. The momentum is still to the downside. Let's try not to get run over. Can I see some buying on the S&P? Still dropping. 46 on the bid. Also, sellers being absorbed. Let's go long. There's the push. Come on. It's coming in. Drops again. Gotta be very careful. There's the push. Nice. Take the profits. I have this falling profile here that they sold off from. Very fast push down. Can I sell from this point? If I see momentum building up, going fast, I'm gonna exit it short, move it up higher. That's a fast rise up. So I'm moving my stop or my sell up higher. S&P is breaking the highs. There's a drop. If I see another drop, I'm gonna go short. That's a lot of selling on the S&P. That's good. I'm gonna try to go short from this point again. If they do go up, let's try not to get run over. It likes to bounce down from this point, so I'm gonna try to get in. Can I get filled? Okay, I'm gonna get in earlier. Fill me in. There's the fill. There's a drop on S&P. Nasdaq should follow. Seeing sellers coming in. 263. That's a lot of selling. They push up. Can they continue? There's a drop again on Nasdaq. That's good. So this is the zone where they moved down previously from, so I'm gonna expect that move down again. You can just see the lack of buyers on the S&P. Very strong move on the S&P. Yeah, I gotta get out. Can I go long again? 125. Seems like this is a very strong move to the upside on the S&P. I can see some bids being absorbed. I'm gonna go long. Go long on Nasdaq as well. We can see this falling profile. where they held previously from. So I would expect a big rise up again. So that was a very strong move to the upside on the S&P. So they will not let this one go down that easily. So I would expect big bids to come in to protect this zone. Come on, as they push up, S&P will follow. So this is just the patience game. We know that the S&P will move up because it's such a strong move to the upside. So all those wicks down are just designed to make you get out from the trade, even though the move is still strong to the upside. You just have to absorb those little sharp drops down and be happy with how much you're losing. So there's a move up. I'm gonna take the profits on the Nasdaq. Happy days. S&P still moving up. 156, 149. We're still above that 5 EMA, but it's a pretty extended move to the upside. Usually I like to play some, or I like to exit the trades. That's very nice profit for 100. Looking to get out, still going up. That's good. 164, 137. Sharp drop down. I'm gonna get out. $90, 142. So you can just see how they go up, break the highs, come down around 10-20 ticks, then they go up again. So it's that rise, retrace, continuation, rise, retrace, continuation. You can see this 285 came in here, so let's see if that guy can protect his zone again to move up. I'm gonna aim for the highs again. Aiming for the highs again. Just I'm trading that memory in the market. They move up, break the highs, move down, move up, break the highs, move down. We can see a lot of buying on the Nasdaq as well. And then they drop down. Gotta be careful, protect the profits. Not looking to risk that much. Can I see that move up on the S&P? Come on. 96 moves up, pulling from the bids or from the offers. That's a lot of offers being stacked up here, so can I see the flush up? Come on, there's the flush. Come on, break the highs. There we go. There's profit. Good. A lot of buying on the S&P, on the Nasdaq, sorry, as well. We are at 21,300, which will probably act as a bit of a resistance point. So if I do see them going up and slowing down a bit, if I see momentum slowing down, I'm gonna go short then. So let's see. So you can see how they come up and how they slowly tick up and they drop. You see, slowly ticks up, drops. So I could go short. Very tight stop. I'm not looking to risk that much. Can I see the drop down? Come on. It goes up. Gotta be careful. Come on, drop down. Okay, we get out. 150 loss, not a big problem. 100 on the sell side, 103, 126. Seems like they're slowing down again. But Nasdaq is still moving up. As you can see, it's still in that trajectory to the upside. You can see all these imbalances that they can trade towards. So that was a mistake on my end. I didn't pay attention to all these imbalances up here, but we didn't risk that much. It was a low risk trade, so no problem. So the market slowed down a bit. It's not moving as fast as before. So look for them to slow down. That's a very fast move up. And if I see them closing strongly to the upside, I'm gonna go short immediately because they like to trap people like that, where they close these strong candles to the upside, and then people go long from the highest point, which is bad, and then they immediately drop down. So let's see if they will close the candle strongly. You can see just the sheer amount of sellers coming in, 221, 132. There's drop on Nasdaq as well. Can I see a drop down? Come on. Waiting for the sharp drop. Sellers still coming in on the S&P. Nice. There's the drop. Come on. Pick up steam. Good. Bit more. Come on. Good. Take the profits. Nice. I hope you guys saw those sellers coming in. I immediately acted. Took the short. Okay, it's picking up steam. Gotta be careful now. That's a very fast move up. So someone is in here. Then you see the fast drop down again. Still seeing those sellers coming in, but I can see them being absorbed on the S&P. So I'm gonna go quick long. Okay, we got one tick close to my TP. Then it moved down. Come on, push up. 116. Come on, don't drop down. Okay, Nasdaq is dropping. S&P is gonna follow. I'm gonna get out. No problem. You see they are breaking down this 5 EMA. Let's see if they can break it down even more. If they hold, it's gonna go up. So we can see this drop is not that much selling, so I might go long now. There's the rise. Can I see Nasdaq push up? You can see those pushes. That's 117 on the buy side. That's a lot of buying. If they break this point, it's gonna flush up. There's the move. S&P 150. Good profits. Lock in that. Come on, Nasdaq, push up a bit more. Come on. Come on, Nasdaq. There's the push. Nice. Take the profits. Good. So we saw no sellers coming in when price dropped. Then we saw those buyers coming in. Usually that first break of the 5 EMA will not sustain itself and they will not close strongly to the downside. So I just traded the logic of them trapping sellers to go up again. And that was the right logic to play. We profited. Good trade. Moves up again. 140 on the offer, but then you see that it being pulled. So they're gonna flush that up very easily. So let's trade towards that offer. Come on, push up. Push up, come on. It's on the Nasdaq. You can see them selling, but it's being absorbed. It drops down. Come on, S&P, push up. Come on. There's the push. Good. Nasdaq's breaking its highs. You can see how they come to this falling profile, they push up. And I can see that Nasdaq is holding out pretty well, so I will have a pretty tight stop, but I'm gonna trade towards the high, the previous high again, 128, 150 on the buy side on the S&P. Come on, push up. Nasdaq should follow. Quick 120 profit. Come on, 36 comes in as well. 216. That's a lot of buying. But it doesn't seem like they can push up. Unless they do, there's the move. Come on. Fill me in. Break the highs. Come on. There's the profit. Then they drop down again. Okay, so that will be it. Hope you guys got something out from this drill. You just saw how we traded momentums. Sometimes we traded those memories in the market as well. We can see how they like to move up, how they like to move down. We like to trade towards places where there is a lot of interest, which is the highs. and we like to go long from the places where those buyers came in. So we're trading the memory in the market as well. We're also trading the momentum move. We can see how quickly they drop down, drop, and how I'm moving my buy slower. So I'm just trying to get out from that sharp drop down, just to get a better feel to the downside. Because if they're moving down very aggressively, there is no reason for me to go long here if I know that they will pick up speed from that point and maybe drop down even more to a place where I can get a better feel on my long, which means I'm going to go long from a lower point, which means if they do move up, I'm going to be in profit sooner, of course. So those are those little signs that the market gives you, those fast moves up and down that you can use to your advantage. So yeah, hope you guys enjoyed this one, and I'll see you guys in the next one.